Good morning, and welcome everyone to this inaugural One City webinar. I'm just going to pause so I can see there's a few people coming in as we make a start. Great to see lots of people joining us. So this is our first One City webinar ever. This is collaborating to bring investment to Bristol and beyond. So this is the first, not only our first ever webinar, but this is the first in what we hope will be a series, our foundation series, where we are planning to take a deeper look at some of the critical enablers that we have set out in the newly refreshed One City plan for Bristol. So my name is Jude Langdon. I'm head of the City Office at Bristol One City. For those who perhaps aren't so familiar, Bristol One City is an approach and a framework for collaboration that brings together organisations, communities and citizens to take collective action that drives us closer to our long-term vision for the city. So our aim in launching a webinar series is to provide more opportunities for more people to hear about some of the big issues in Bristol that cut across some of the traditional organisational boundaries. And we're hoping that by bringing together some of the most experts and some of the most exciting voices in these fields, no pressure panel, we can host conversations that we are going to be both enlightening and we hope thought-provoking. So in just a few moments, I will hand over to our chair for today, Carmen Peacock, but I'm just going to start off with the limit of my role, really, which is a couple of tiny pieces of housekeeping. So first thing to say is we are recording this webinar and it will be available on our YouTube channel afterwards. There's no chat function, but the Q&A function is enabled. So please do pop any questions to the panel in as we go along, as they occur to you, and then we will aim to pick up as many of those as we can in the final section of today's webinar after we've heard from all the speakers and from all the panel. So I am the least important person here today, so I'm going to finish my segment and say I'm very pleased to introduce to you today our panel. We'll introduce our chair, Carmen Peacock. So Carmen is Regional Head of South West and South Wales for Lloyds Bank. Carmen brings extensive experience in the regional corporate landscape from her role supporting regional businesses with complex financing needs across all sectors and sizes, as well as through her national role as Head of Private Capital, working with some of the UK's largest innovators and employers. Carmen has been part of the CBI Regional Council since 2019, and in 2024 took over as chair, contributing to the South West narrative and collaborating with the region's largest corporates to help our region prosper. Delighted to have her here. Welcome, Carmen.
Thank you so much, Judith, and thank you to you and your whole team in putting this series of webinars together. Good morning, everyone, and thank you all for taking the time to join us for this inaugural session of the One City Foundation series. It's a real pleasure for me to be chairing today's discussion on how to collaborate to bring investment to Bristol and beyond. And as Judith mentioned, this series is designed to open up the One City programme to a much wider audience and shine a light on the critical enablers that we must strengthen to deliver Bristol's shared missions for 2050. So before we begin, let me briefly frame what today is about, because the One City approach brings together our major institutions from local government, health partners, universities, business, the voluntary sector, and the community. So we can align on shared priorities and we can deliver on long-term change. And the refreshed One City plan from 2025 is built around 4 missions. The first one is an equitable, sustainable economy, fairer life chances for children and young people, connected and cohesive communities, and a climate resilient city with nature recovery at its heart. So from our side, investment underpins all these 4 missions, and without more investment and better coordinated investment, we simply cannot deliver the scale of ambition that our city has set itself. So today's session examines how we attract and deploy capital at different scales with public, private, and blended finance, and how we can ensure that investment benefits the whole city. And most importantly, we'll look at how collaboration across sectors can accelerate this impact. And we've got, in terms of agenda, we've got some speakers, distinguished speakers today, and we will have a discussion with the panel, and then we'll open up for Q&A as well. So I'm delighted to be joined by Ed Robery, who's the Chief Executive of BBRC, and who brings expertise in blended finance and what makes a proposition investable. We also have Karen Mercer, who is the Programme Director for Bristol Temple Quarter, and that provides insight into regeneration as a catalyst and how public investment unlocks private follow-on capital. And we're also pleased to be joined by Nick Dixon, who is the investment lead at Avon Pension Fund, sharing how institutional investors look at risk, at return, and at long-term value in place-based investments. So thank you all for being here, and I really look forward to our discussion. So let's get started. I will ask all three speakers to share a little bit about their roles and some of their initial observations on how we can deliver the One City plan. And maybe we can start with Ed. So Ed, from BBRC's experience, what makes a project truly investable? And how does blended finance help reduce risk and attract private capital into Bristol and the wider region?
Thank you, Carmen. Great questions. What I might do to answer those questions is start with a map, and I'm hoping that the screen will get shared with something called the spectrum of capital, and then I'll try and land that practically within the context of One City, and then also in context with questions around what makes something investable or not. So hopefully you can all see that now, the spectrum of capital. This is a document which has been published by the Impact Investing Institute. That's an institute that represents the world of impact investing. I'll explain that in a minute. And just to briefly describe that document, what you'll see moving from left to right is that there are lots of different categories of investment. There's traditional, responsible, sustainable impact investing and philanthropy. And it's very important, in my opinion, in this world to be clear about which bit we are talking about when, because they're all quite different, although they do go along this spectrum. So the finance goals are the first column that goes across, and I'll just explain that as a concept. That talks about risk-adjusted returns. Now, what do we mean by that? Usually, when something is more risky that you're going to invest in, you need more of a return. So think a startup. If you're going to invest in it, you may lose your money, you may make a fortune, e.g. Facebook or any of the tech companies, but you're going to need a higher return to compensate for that risk. Counter that with government bonds, low risk, low return. And as you move across that spectrum, what you'll see is that on the left-hand side of the diagram, those operate normally. In other words, the higher the risk, the higher return I require. But when you start moving across to impact investing and philanthropy, what you can see is that in certain cases, some people will accept a lower return because part of their return is impact, positive impact. And eventually when you get to philanthropy, that's total gift, and therefore there is zero return, minus 100%, other than the impact return, of course. Impact goals, you can see as it moves from left to right, gradually you move from something on the far left, which if you trace down to traditional, that yellow bubble, what that says is, I'm aware of the potential negative impact, but do not try to mitigate it. So think an investment into a gambling company, for example. But as you move across, there's an avoidance of harm. That's that sort of turquoisey blue colour. Move across further, there's a more of a positive intent to benefit stakeholders, and eventually you move to contribution to solutions of impact investing and philanthropy. And the intentions, I've picked up the yellow one on the left, which is I'm aware, but I choose to ignore it. You then move across to that blue bubble. I want to behave responsibly. I have regulatory requirements to meet. Moving across to the purplish one, I want business to have positive effects on the world and help sustain long-term financial performance. And then eventually in the blue one, you're talking about, I want to help tackle some of these issues like climate change. I want to tackle some of these social issues. So gradually, as you move across, what you can see is it gets more intentional. And in certain cases, as you get further to the right-hand side of the diagram, there's an acceptance of lower returns. There's a point about scale I'll make, and then I'll move on to the specifics. The yellow traditional bit per ChatGPT, is about 100 to 110 trillion if you exclude all of the rest of it. The responsible bit, the sort of turquoisey, is 30 trillion. That's responsible and sustainable combined. You might have referred to it as ESG investing, environmental social governance investing. The impact investing bit, so the sort of dark blue, is about 1.6, 1.7 trillion, and philanthropy is thought to be around 2.3 trillion. Those numbers are around sort of 2024, they're slightly out of date, but it gives you a sense that there's a lot of work to do to move actually some of those yellow, we will invest but we don't care, the 100 to 110, into the world of actually, you know what, we want to invest both for a return but also for the positive aspects of society. So that's a map. Hopefully that is helpful to learn this all. Just briefly then, how does that relate to One City? Well, my view is that actually you need a policy framework, you need a collaboration framework like One City in order to demonstrate the intention via which responsible, sustainable impact investors and philanthropy can invest. And if you don't have that, it's very difficult for investors to know whether they're investing in the right things in the right place or the right place. So One City is key as a signal to investors to say, this is a long-term vision, we're intentional about doing the right thing, and we want to make sure that you therefore have confidence to invest for a return. Now that manifested itself in BBRC and the work we did with One City around city funds. That was a fund, it was 10 million, it was a blended finance fund. And what that meant is that we're blending different types of money to point at positive impacts like community-owned renewables, like housing for key workers, things like that. And the investor makes a return, but they're also delivering the impact which points to the policy lead from One City. And then leading in, I suppose, to Carmen's question about, well, what makes a proposition investable? I think the honest answer is it depends. You're going to hear a lot of different speakers with different scale. We've got Bristol Temple Quarter represented here. That's a mega project with lots of complications to get things investment ready, I would imagine. You're going to hear from a pension fund. There will be different fiduciary or legal requirements from pension fund to make something ready. In the world of impact investing and philanthropy, there are, of course, investment readiness requirements, but it might be that in order to create impact, there is a slightly, I say slightly, lower bar than maybe some of the institutional grade investment. And that's enabling small and medium enterprises, social enterprises, community groups to raise money with good governance, with good management, with a business plan, with a clear route to revenues and repayment, but not necessarily at the level of regulation that you might see in the institutional world, the responsible and sustainable. So just to conclude, the map there gives you an idea. I would say that BBRC, the company that I'm representing, operates within the impact investing space. And the final bar I'll draw your attention to is that little tiny one that says finance first, impact first near the top. And we operate across both of those spectrums. And we can only do it in Bristol when there's a positive policy framework like One City with intention to do those things that investors and a place want to do. So that's probably my attempt at your question, Carmen. I hope I've done it some justice.
Yes, thank you so much, Ed. And it was really helpful to have the visual aid and just surfacing the importance of policy and collaboration framework, having the right environment for investment, the clarity and the measurable impact. And it's great that we are starting the conversation thinking about impact investing as well. So let's move on to Karen. And Karen, we know Temple Quarter is one of UK's largest urban regeneration opportunities at the moment. So I was wondering, where have you seen public investment act as a catalyst for private capital, and how can regeneration ensure wider city benefits like inclusion or skills pathways and low carbon growth? It would be great to hear from you on these questions, but also an overview on Temple Quarter as well. Thank you.
Yeah, thank you, Carmen. So I'm going to start with sort of providing a sort of a brief overview of Bristol Temple Quarter, and then we'll start to sort of work through how we're creating investable propositions that actually are in line with the city mission. So, as you said, Bristol Temple Quarter is a substantial regeneration opportunity at the heart of Bristol. It is right next to a Grade 1 listed building, Temple Meads Station, which is just an absolutely fantastic opportunity. The site extends to 135 hectares in central Bristol, and our ambition is to deliver 10,000 new homes alongside thousands of new jobs and create community infrastructure that's really needed to deliver a good place long term. It is a partnership that is driven by, set up the Bristol Temple Quarter LLP was set up in March 2024, and it is a partnership of Homes England, Bristol City Council and the West of England Combined Authority. We recently procured Muse Places as our preferred development partner, and working very closely alongside Network Rail, the operator of the station, and also University of Bristol, in order for us to deliver new homes, jobs and public sector spaces together. This is a long-term partnership which we hope will set the new benchmark for community-focused regeneration as it delivers homes and opportunities across Bristol and the region. As I mentioned before, the potential is there for 10,000 new homes and 22,000 new jobs, creating 1.6 billion boost to the regional economy each year. And just to give an idea of scale, 135 hectares is the equivalent of 200 football pitches. So it is a substantial part, sort of next to the city. And we're incredibly fortunate that the University of Bristol have established their new university campus at the heart of the scheme. So they made a substantial investment of 500 million into a new campus, and that will open in September later this year. And then in terms of our partner Muse, we are currently working up a master plan and intend to submit a planning application in February 2027, so we can get going as soon as possible on building those new homes. As I mentioned, collaboration is key. This is a public-private sort of partnership on that. Regeneration schemes do take quite some time, just in order to be able to put the building blocks in place to create those investable propositions. The enterprise zone was established back in 2022, but it's always been backed by a really strong partnership between the combined authority, Bristol City Council and Homes England, alongside Network Rail and University of Bristol. And I think here is quite important because we're creating something for the long term. It provides those partnerships to weather multiple economic cycles, as we know, as well as Ed had mentioned earlier about the complexity of issues in getting these things going. So establishing those relationships and trust is incredibly important in delivering projects like these and creating these investable propositions. We have appointed Muse, as I mentioned, recently as our preferred development partner. So that was back in January, just gone. And again, we'll be working with them on the scheme. It's really important to us to select a partner so we can be working jointly on what we then establish the new master plan and moving forward. And then we are bringing the local, regional and national perspective, and Muse then will be bringing in their delivery expertise, new ideas and capital to bear across the programme. In terms of, Ed mentioned about risk and return and levels of sort of certainty around that. Where the public sector can play a really important part is de-risking opportunities. In Bristol Temple Quarter, central government have provided a grant of 95 million, specifically for enabling infrastructure and unlocking land for development. So in terms of what we have been doing over the last sort of 2 to 3 years, we have built a new eastern entrance to Bristol Meads Station, which will then link into the University of Bristol when the campus opens later this year. That will also provide key routes through to the new regeneration areas immediately beyond. I think I've mentioned already the University of Bristol's investment of 500 million. That was an absolutely brilliant thing to do sort of 2 years ago, considering this current market. And that has played dividends in terms of attracting new opportunities and increasing confidence in the surrounding areas to invest, which is just absolutely brilliant. And then another example is where Bristol City Council have put £32 million worth of investment into remediating Temple Island, which will then bring forward future homes and also office space within the regeneration area, sort of on Temple Island. All this is centred, though, on supporting the One City mission. Important to us is low carbon growth, skills and inclusion, and providing child-friendly development and community assets that are needed for long-term placing. Inclusive growth and sustainable growth is central to our approach. We have a charter that all organisations within Bristol Temple Quarter are linking into, and our priorities lay out key actions under the 3 areas we've mapped directly onto the One City missions. These are sustainable places, good work for all, and community wellbeing. We are looking at long-term pathways into the work, particularly for deprived areas around Bristol Temple Quarter. Barton Hill and Redcliffe are amongst 95% more deprived than other parts of the UK. And I'm sitting now in our community hub that's been in place for the last 6 months, where we've been providing training opportunities and construction and skills courses to people in the local area, so that we've established a vision, so a place on site where we can be linking in with the wider communities. And then also we are progressing master planning, and sitting behind that, we're undertaking a lot of due diligence around land assembly, looking at what infrastructure is needed, what is costing, in order to then provide a framework that developers and ourselves can be then implementing that framework moving forward, again to provide that greater certainty on what is needed to create an investable proposition. The Temple Quarter, it's worth noting, it is the central plank of the West of England's regional growth story, as well as Bristol City Council's local plan. It is the driving force behind the central Bristol and Bath growth zone. We are also very closely linked to Brabazon and the Western Innovation Arc, which is being promoted by the Combined Authority and unitary authorities across the region. And between us, we have the potential to deliver 50,000 new homes, enhance regional connectivity and drive growth in the West of England. Bristol Temple Quarter will soon be linked by a short rail connection between Brabazon and Bath, and we will be at the central axis of this nationally significant growth corridor. I think just where I want to finally wrap up though is that all this is done through collaboration. It is a public sector partnership. There's also many developers that will build out within our 135 hectares. And it's really important that we are working with the local community as well, in how we provide that increased certainty. And in that, I believe that what we are doing, we actually are de-risking and providing greater certainty for development and investable propositions within, because of providing that long-term, clear pathway over what we want to see across Bristol Temple Quarter.
And the vision that you've just shared is really exciting for Bristol, for Bath, for the wider region as well. And it's really great to hear how vital certainty and long-term certainty and planning alignment and having a right mix of blended finance from central government and local government and universities and private sector, and how vital long-term partnerships are. It's really great story and example of what's happening in Bristol that is making a vital impact. Mick, let's turn to you now. From the perspective of a long-term institutional investor with Avon Pension Fund, what gives you confidence to deploy more capital locally, and what kind of revenue models or governance arrangements or delivery partnerships matter most to you?
Thank you, Carmen. I'm delighted to participate. I hope you can hear me clearly.
Yes.
Good.
We can.
Yeah, first of all, before I answer that question directly, let me just paint some context here. Because the Avon Pension Fund, a lot of people may not know what it is, but we essentially serve local government across Bristol, Bath, Gloucestershire, Somerset. We have about 150,000 members who either have worked in local government or aligned organisations. So our members include social workers, rubbish collectors, town planners, school administrators, etc., but not teachers, the police, and others who have their own schemes. The average pension we pay to our pensioners is about £4,500 a year. So these are not affluent people, and they're people who really rely on our pension to top up the state pension. And those pension promises are backed by about 6.5 billion of assets that we manage. So it's a significant pot of capital. We manage that in a highly diversified way. Our asset allocation broadly is about 45% in equities, mainly global. We have about 15% in infrastructure, including renewables. We have some corporate bonds. We have government bonds. And we also have a bit of private equity investment in private firms. And within that, within our 6.5 billion, we allocate about 5% or just over 300 million to what we call local. And by local, we mean across the Southwest, including the Bristol area. And that's focused on things like renewables and affordable housing. And to come to your question more directly, Carmen, we're interested in this sort of thing because we do have a responsible and impact-focused investment strategy. In aggregate across our portfolio, we want to drive returns that are broadly inflation plus about 4.5%. So think of that being about 7% in aggregate. But depending on the risk of the individual investments, that can range between things that give us 4% a year with pretty low risk, think government bonds, up to 9% a year, and think of emerging markets and global equities. Now, the question then is, how does place-based and local investment fit into that spectrum? And when we look at affordable housing, we're looking for returns in aggregate of about 6% per annum, which would be 3% rental income and about 3% capital growth. And I think with affordable housing, the place-based stuff, we can see investments that deliver that. And in the next few weeks, we're going to announce 2 things that we're doing in Bristol and South Gloucestershire that fit that profile. I would just make one other sort of general comment, picking up on what Ed said, namely, I think we need to be really clear that the pool of private capital willing to make lower returns in exchange for impact, that's a tiny, tiny pool of capital. I'm willing to make impact, but I'm not willing to make any compromise on the risk return profile. Now, that's kind of the bad news, but the good news is that there's an increasing alignment between financial returns and impact. And my final thing would just be to sort of emphasize as part of that I am not a benevolent public individual. We run this fund like it's a private fund, and I want to drive really high returns. And I want to do that because if the fund drives high returns, then I reduce the contributions demanded from the local authorities, including Bristol. And I'm having conversations with all of them now saying that your contributions are coming down from about 20% of salaries to about 16% of salaries. And the main driver of that is that we've made investments in companies like Microsoft and NVIDIA, which have generated really high returns. And we're indirectly churning those returns into the local community by reducing the contributions from local authorities. The circular macroeconomic effects are really critical here. And therefore, anything that I do locally has to fit within that framework.
Thank you, Nick. That's a very interesting and really valuable perspective as well, because you can see clearly how you are putting money back into people's pockets by reducing the pension contributions if your portfolio is performing well. And it's interesting to hear your investment philosophy as well. So let's bring all the 3 of you together now, and I'd like to explore a few themes that kind of cut across your inputs. And the first question I have, and maybe we go to Ed and Karen first, and Nick, if you're able to come in as well. The first question I have is around clarity of purpose. And I wanted to ask if are we as a city region clear enough about what we want investment for and what would strengthen that clarity in the context of delivering the One City plan for 2050?
So I think the answer for me is yes and no. Okay. So the yes, I think we're really clear when it comes to projects like Bristol Temple Quarter, when it comes to the Western Innovation Arc, the very big infrastructure projects that actually these are important, that they're long running projects, but this is something that the city gets behind, and we need to do our best, quite rightly, to maximise the opportunities for the right investment to come into the place. Where I think there is a degree of lack of clarity between policy and investment is, I think the policy framework between the policy framework that's outlined in One City is pretty clear. It's around, in my mind, to paraphrase, inclusive and sustainable growth. Now, I have a view that inclusive and sustainable growth, of course, will be partially driven by those large projects. They will create employment, they'll create people spending money, they'll create jobs, etc., etc. But not only. And therefore, I think there is a missing piece here, which is, what about the smaller end of the economy? What about the SMEs? What about the social enterprises? And I feel, from experience with BBRC, that is somewhere where we don't have clarity at the central, regional or local government level to say what is the policy for bringing funding in to intentionally fund that with a view to delivering on the One City plan. So I think there's a lot of potential there. There's a lot of actors who want to do it, but it's not joined up enough. And that is a gap that I'd like to see better addressed.
Thank you, Ed. Karen, or do you have any views on this?
Yeah, I mean, I tend to agree with Ed. I mean, I think on Bristol Temple Quarter, we recently procured Muse as our preferred partner through a procurement process. We needed to be really clear in that process of what we were wanting out of that partnership. We were selecting a partner rather than a sort of a scheme in itself, but being able to set those boundaries. And what was quite important to us was to be clear so that we could have the leanest, most efficient procurement process, given it was a public procurement process sort of in place, and also very mindful of sort of the cost of these procurements to make sure we would minimise the sort of capital outlay. So, we're very clear over sort of Bristol Temple Quarter area around that. I think linking into the SMEs is quite right. St Philip's Marsh, which is our sort of second area that we're sort of focusing on and where we're putting the development framework in place. There's many businesses there at the moment. There are many startups, there are many sort of SMEs, and we need to be working very closely with them over how we sustain their sort of long-term future with future investment coming in. And that is a space where we're working really closely with the combined authority and partners over how that becomes sort of part of our vision as we start to sort of take those schemes forward within the Marsh area.
Thank you, Karen. And I think it also plays into strengthening the supply chains as well, because it's the SME who are the backbone of innovation. Yeah. Just on the same topic, Nick, do you feel that as an investor, you see the right types of opportunities in the local area? Because you've mentioned you have about 300 million allocated for the local region. What is your perception of the opportunities for investment?
The answer to that is yes. So we want to deploy our 300 million by the end of 2027. We've already deployed about 120 million after 18 months, and we have another 2 years to go. So the opportunities are there. We see a myriad of opportunities. One is in SME funding. So we're providing growth capital to companies that need to scale up. So they've got a business model that they think works, but they need capital to grow their customer base, expand their operations, and take risk. And we're doing that in technology and also in things like law firms using technology to be much, much more efficient and charge lower fees. That has a big social benefit. If you pay 500 quid for your conveyancing instead of £1,000, there's a social benefit there.
Yeah.
Social benefit it can be broadly expressed. The second area is renewables. We've invested in 15 solar farms across the southwest, including one by the M4, M5 junction, so renewable energy. And we do see opportunities in affordable housing, but that is more complex because it's really difficult to get the economics right on affordable housing if it's an open land auction to the highest bidder. You need some kind of partnership and intervention and perhaps subsidies from Homes England, but we're about to announce two things we're investing in across Bristol. The other comment I would make, though, is that although the individual schemes are clear to me, like Bristol Temple Quarter, that has real clarity. What we find confusing is there are so many public bodies involved that sometimes I lose the plot. So we've got Bristol City Council, we've got the West of England Combined Authority, there's Western Gateway, there are other bodies. So all of this stuff is very complicated around the edges. And I don't know how we solve that, but it would be much nicer if there was a clear body we dealt with consistently that could bring all these different schemes to life. But the individual schemes and the vision for Bristol is very clear.
And this, Nick, ties in really nicely with my next topic for discussion, which is around the collaboration. And actually what I'm hearing is really strongly that it would be great and really valuable that the public side of this investment speaks with one unified voice and it's one unified group of stakeholders. And I was just going to ask, and Karen, you've already mentioned some really good examples on where are we already seeing really good, strong collaborations across partners and what it would take to scale that. And again, maybe we go to Ed and Nick, and then Karen, if you want to add something, because you've already kind of touched into it.
Yeah, so I think I mean, we are on a One City webinar, so I'll say there are some good collaborations and have been good collaborations. We've seen that in the past as BBRC, where Better Society Capital, which is holding dormant assets, which are basically, in other words, forgotten bank accounts, invested alongside the City Council to create a £10 million pot that was then multiplied fivefold, creating about 50 million of economic and social impact in the Bristol City region. So that was a really good collaboration. I think the emerging landscape is interesting because we have a government that wants to devolve, and I suppose I'm slightly trying to pick up on Nick's point here about the confusion of who is the counterparty to deal with as an investor. My feeling at the moment is the energy and direction of travel is towards combined authorities as the route via which some of the public money might collaborate with. So what do I mean by that? Things like Homes England, things like the British Business Bank, things like the National Wealth Fund. It strikes me that some of economic policy, some of investment policy is pointing towards combined authorities. Now, where does that leave Bristol as a city? Where does that leave One City? Well, Bristol is a part of the combined authority. So I think that collaboration where you've got a regional mayor, a council that has one city and a leader, plus then those sources of public funding with a view to understanding what private funding, and if I count Nick as a private funder in this particular case, I assume that's right. I'm not sure that's right per ONS, but it is how I feel and think. If you get all that right, then I think suddenly we will see a significant increase in investment landing in place. But unless the plumbing is connected, if Nick is getting confused and he's running the Avon Pension Fund, imagine if someone else who's not from this region, what they think and what they perceive.
Yeah, and I would agree with Ed and say that it's really a city region, not just a city. Because areas of South Gloucestershire, North Somerset, Baines, etc., are part of that wider region, and it needs to be thought of in a more macro, bigger scale because it's also connected. Now, there'll always be a question about where do you draw the boundary. But if you think of it as a region, then you're likely to draw the boundary more effectively than if you have lots of little pockets. And also the other thing is that if you have bigger authorities driving investment, then you have greater scale with which to attract interesting pots of capital, and you can employ really good quality people to drive it.
Yeah, I mean, I would just like to echo that from a LLP, perspective. I think it's worth mentioning that the LLP was created to try and avoid sort of that confusion. So that's where Homes England, West of England Combined Authority, and Bristol City Council created the LLP. So there was a single party in which land and other elements could be transacted with the private sector. So I guess recognising that. But we also see ourselves very much on the regional scale, which is why we're linking in with Brabazon and the West of Innovation Arc alongside the university, so that I think jointly together we can attract those investment pots on a more national and international scale, which will be really important for driving growth across the region.
Thank you. Thank you all for your inputs there. And I think that's really interesting as well. And Karen, if I can stay with you, because you have mentioned in your opening different types or scales of capital as well in what's gone into the first phase of Bristol Temple Quarter, and you obviously have an eye on what's needed in the next few phases. And I just wanted to ask around the investment needs for Bristol and for the One City plan in that context of what types and scales of capital are most critical over the coming decade if Bristol is to meet its missions. What are we trying to attract in terms of investment need?
So I think if we sort of focus on sort of Temple Mews West, which is our sort of first phase around the station, we have attracted public sector investment there. We will, and Nick mentioned this earlier in terms of sort of affordable housing and the role of Homes England, given the viability issues that sort of facing across the whole of the UK at this moment. If we are wanting to deliver affordable housing at scale, we will need more investment, which we will be looking to partners to assist in that. I think it's really exciting at the moment that Homes England are announcing their sort of new programmes and also the establishment of the Housing Bank in due course, and we will definitely be wanting to have sort of conversations with Homes England there. And Nick had mentioned the National Wealth Fund, the Avon Pension Fund. There's roles to play there across other sort of organisations in that, as well as private sector investment coming from our sort of development partners. I see that in order to get these schemes going, it will be a blended finance and investment across both public and private sector to truly get the level of quality of placemaking, investment and growth that we want to see across the region.
Thank you, Karen. Nick, Ed, any further observations on the investment needs to deliver One City?
Well, the only thing I would add is that two thoughts. One is I think the public sector is absolutely critical as the catalyst, particularly in regard to land assembly. So 12 plots combined with an overarching plan are much, much more valuable socially and economically than 12 separate little plots all doing different things. Because then you can create a cohesive architecture and design. But the second thing is there's lots of room for disparate private activity, e.g. supporting SMEs. That doesn't need to be that well structured and with lots of state intervention. It can involve asset managers finding companies to invest in and providing capital, or the Avon Pension Fund. And there you can do a lot of very, very meaningful social impact by providing growth capital and high risk capital. And that's from all sectors across the financial landscape. And it doesn't really need state intervention. In fact, in many cases, it needs government to get out of the way.
My only reflection really is listening to what's been said. If I was to boil down a couple of really key impacts, one is going to be people need a home. The other is people, of willing and working age need a job. And for me, a lot of the conversation around the public sector acting as a catalyst is absolutely right, but it can only, I think, really act as a catalyst effectively in place within the reality and the context of real places to invest, real companies to invest, and that's where, for me, if public policy around investment is well designed, it will work with places like Bristol on a regional level, and we will produce the type of good growth that we need to get our economy firing on all cylinders.
Thank you. Yes, that's really, really vital as well. Just moving on and developing a bit on that conversation. A bit earlier in my introduction, we spoke about the missions of One City, and there are 4 missions to be achieved by 2050. And they kind of resonate quite well with your individual companies and activity at the moment in the region. And the question I had from your experience is, how do we turn mission-led ambitions that we have as a city into investable propositions that private and institutional capital will back? And Nick, you've alluded to some of these already in your comments. I was wondering if you can explain a little bit more, as an investor, how can we turn what we want to achieve as a mission into something that is backable?
Yes. I think that if I look at it from a pension fund lens, it's all about what stage of the development are we comfortable investing in. And if I'm brutally honest, given our risk appetite, and the fact that I've got to pay those, 50,000 pensioners every month, 4,500 each on average, I've got limits to my risk appetite. So if Karen is developing the Bristol Temple Quarter, for example, I wouldn't be willing to be one of the seed investors at the outset. I would need that. So I'm not willing to take a big risk and potentially get 15% returns by turning some polluted brownfield land into something that's a wonderful community. I won't be the initial guy doing the digging. But if Karen has got planning consent, the pollution is sorted out, the construction has started, so we've de-risked on planning and construction, at that point, I'm happy to come in with pension fund capital. So it's a selfish, actually, because I want you guys to do the really heavy lifting and hard work, and I'll come in and get a free lunch. But my free lunch will be at a return of 5 or 6%, rather than the early, braver investors who might get 15%. So I hope that answers the question from a sort of strategic investment perspective.
Thank you, Nick. Karen, any views? Obviously, you've raised a lot of capital early on.
Yeah, no, I think that's absolutely right, and we completely recognise it. Sort of land assembly is something is so uncertain. Having a site that's cleared, has planning, and being able to move forward to attract that investment, is fully understood by the public sector. A previous job where we'd secured sort of 300 million to build a new train station and then also assemble the land. That enabled private sector investment to come in, and that scheme is now sort of well advancing. So I think that is, there is very much a place there, I think, for local government and central government be able to sort of take that role to de-risk it as much as possible, and that's what we're starting to do sort of in St Philip's through this, having the supplementary planning framework and being able to work with some of those seed investors that are willing to be able to sort of take forward sort of schemes within the area.
And you've alluded to earlier as well this wonderful phrase of public and private partnership as well, and the timing of when the funds flow will be crucial to a successful public-private partnership. And Ed, with your hat as place maker. What is your view in terms of how to create investable propositions?
Turning missions, which are sort of high-level intentions, into investable propositions. I think, what are investors investing in? Well, we talked a little bit just now about projects, big or small, housing projects, regeneration projects, but there are also companies. Nick referenced some of the companies that he's investing in. There's a subset of companies which are community interest companies, potentially even trading charities, and that's some of the work that BBRC has done in the past. And I think the consistent point with the last conversation around all of those, if you like, local asset classes, is it's all about how do you get the risk reduced as fast as you possibly can, such that investors can have their, relatively speaking, free lunch. I think for projects, we've talked about it a bit. That's about policy certainty. We've talked about policy certainty through different funding bodies. The intervention by Homes England is very helpful, but it needs to be a long-term intervention to do something like Temple Quarter. Planning certainty and clarity around what a place stands for in terms of planning, of course, is also really important. When it comes to companies, I think my observation is, and I'll include sort of community interest companies and charities in there as well. There's an embarrassment of riches when it comes to those companies that can grow fast, the future unicorns, the tech superstars, the hero companies. That's easy. The market can provide that. I suppose and some of them will go wrong, right? There is risk involved in all of those, but many of them, of course, will go well. There are private equity funds that serve that. There are venture funds that serve that. I think there's a sort of another layer where there's sort of good, steady as she goes businesses. There's businesses that actually, they employ people, they give people a reasonable living, but they're never going to be a unicorn. They might be, I don't know, a supply chain for what Karen is doing, a painter, a decorating company, or a construction company, whatever they might be. They'll scale to some extent, but they won't scale globally. And I think in some cases you might say those companies don't scale because there's an inadequate customer base. Well, I think in this region, actually, we've got real potential to have customers because of these big regen projects. There is a lot of opportunity for a supply chain. So let's assume that's going to be okay. There might also then be a lack of scale opportunity because of skills and capabilities in those SMEs. So in other words, do they know how to scale? Are they just a micro business because they are wanting to remain as a micro business, or actually they don't have the skills? And one of the policy problems that I perceive is that there is a lack of investment readiness support for that, what is called at the Combined Authority at the moment, the everyday economy. And there's another framing, which is also the impact economy. This is a national framing, 15% of GDP, about 400 billion. That includes various things. Unless there is investment, and I'm using investment in the widest sense because I think this is non-recourse investment. I think this is funding more accurately than investment into the investment readiness for those real economy type organizations. I think some of that will get left behind, and what we'll see is a bifurcation of the economy where actually the hero companies, the superstars, will continue to grow faster and faster, and actually some of those smaller ones who are doing the bread and butter will get slightly left behind. So I'm advocating, Carmen, to fund investment readiness services more in place in order that we can keep the economy nice and balanced and not just rely on the things that are going to scale to unicorn level.
Thanks, Ed. And I think BBRC already offer an element of that. And I think it's great to be having that sort of signposting and thinking behind how to sort of scale some of the investment opportunities and support some of the sectors that are probably not the headline grabbers, but they do create vital jobs and services in our everyday economy. Coming into land a little bit, I want to talk a little bit about investor confidence, because we know that a lot of the business surveys monitor investor confidence really closely. There is a mixed picture depending on company size, depending on sector, depending on geography. But bringing it to Bristol, in your experience and from your conversations with businesses and partners, what most helps or hinders investor confidence in our city? And maybe we start with Nick and then Karen and Ed on this question. Thank you.
I actually don't think that confidence is the problem. It's spoken about in the newspapers, and there are surveys about it. That's not the barrier that I bump into. The barrier that I bump into is, have I got enough investable schemes in which to deploy my 300 million? Which, have got getting planning consent, getting the economics right for us to invest. And if I think of the SMEs, actually the problem is not so much not enough capital and confidence, but are there the right opportunities to invest in, and how do we connect the people with the capital with the guy running a business in Minehead or the outskirts of Bristol, so we find each other to make that connection. A lot of this is about informal networks and meeting people. And it's about hard work of assessing 1,000 companies, filtering down to 50 that you analyze in great detail, and then you invest in 2. I mean, you'll know about that through Lloyds Bank.
Yeah.
That's the discipline and what you need to get right. And I think it's those practical issues rather than a lack of confidence.
Yes, and just on that point, Nick, it's something that I come across in my professional discussions all the time. Everyone is saying, well, where's the funding available? And I'm saying, well, there is funding available. It's just the lack of awareness of who to speak to and where to go, because we are really blessed in our region to have multiple sources of debt, equity funding, public, private funding as well, and a great advisory network to support that. It's just connecting the management teams who probably in an SME wear multiple hats to the right sources of funding for their company. Karen and Ed on confidence.
I mean, from a development point of view and sort of what we've experienced over the last year or so in selecting Muse, there is a lot of confidence around Bristol. It's an incredibly attractive place to invest. In addition to what Nick has just mentioned there, conversations that we've had is around sort of speed of decision making, clarity of decision making, and governance. In order to invest the money, to make sure that when you invest and start to work up, that you're again then going to be able to sort of deliver your project sort of within a sort of a reasonable time. And we've worked quite hard with the City Council and Combined Authority sort of to put that in place through the LLP. So I think there is that, having that confidence, but being able to build out and deliver as quickly as possible in order to sort of secure that funding.
Thank you, Karen.
Yeah, and just, I suppose, to agree with both Nick and Karen's points and build on slightly, I think that point about informal networks is absolutely right. We're in the age of AI and other things, and is this all going to be technology driven, or is it actually going to remain human? Well, I think it's going to be both. And so how do you get that balance right between those informal networks, that visibility, that human interaction, which I think One City is about, yet at the same time the volume, Nick's example with, I think it was 100 companies, et cetera, how can you do a triage using technology, et cetera, such that you can have some standardized investment readiness approaches, standardized guidance for those who want to raise investment. And I think that's part of the art here, is getting the people and the tech aspects right. I couldn't agree more about the governance clarity. I think the ability to know what a place is about, how it's going to make decisions, and critically when it's going to make decisions, gives investors the confidence that we can take a bet on this place, not expecting that actually it's going to drag on forever and we're not going to know where we are.
Thank you, Ed. And it's really interesting. We spend most good part of an hour without mentioning AI, so that's that's quite helpful to have that perspective. The last question I have for the panel, and then we'll open up for questions from the audience. So please, audience, think of interesting questions for our panelists, is around near-term priorities. And if we can focus collectively on one, let's say two areas over the next 6 to 12 months to strengthen this pipeline that Nick mentioned as well, what should be our near-term priorities to help deliver the One City plan and look at the investment side as well? So maybe we start with Ed, Karen, and then Nick. Thank you.
I think it goes back to your question, Carmen, about how do you turn missions into investable propositions? And the One City plan at the moment is brilliant at casting vision. It's brilliant at, I suppose, demonstrating the values of a place, and it's also really, really good at saying what are the overall missions and priorities. It's not yet gone to that level below to say, okay, if we're going to do that, what does that mean in terms of projects? What does that mean in terms of businesses? What does that mean in terms of social enterprises? And if we want to get to A to B, what do those interventions look like in governance terms, in investment terms, etc.? Some of the things we've spoken about previously. So I think a really practical look at saying, how do you connect the missions to projects and businesses and other organisations, and how might that be funded?
Thank you, Ed. Karen?
I guess from my perspective, I think it's taking that mission and getting on with implementation, and sort of, Bristol Temple Quarter is a long-term program, and it will change as the next sort of 10 years or so as we start to sort of build out. But it's incredibly exciting. We've got the university campus opening in September this year, providing those opportunities for investment and growth. And then also, the LLP is getting on and sort of starting to build that enabling infrastructure to be able to attract that investment. And we want to sort of maintain momentum and pace around that in order to show and start to deliver on the social outcomes that the reason why the LLP was set up in the first place.
Thank you. And Nick?
I agree with both the comments made, and I've got nothing helpful to add to those insights.
No, that's helpful. So thank you again for this very rich and really insightful discussion. So let me draw a couple of themes that are emerging quite clearly from this. And the first one is the need for a clear and shared investment narrative for Bristol. It's great to hear that Bristol has the confidence from a business point of view, but I do think it's important to have the clarity of what we want to achieve and how invested capital contributes to these city missions, connecting it to projects. The other really strong theme that came across was that collaboration across public, private, institutional partners isn't optional. It's absolutely foundational to building confidence and momentum. And the importance of this pipeline of investable schemes supported at an early stage with clear business cases by central or local government and people on that risk appetite curve as well, but also having stronger delivery partnerships and really transparent clarity, speed in governance and those frameworks. So I think two immediate asks from my point of view, if we want to implement One City plan, is to actually shape a shortlist of investable propositions to help Nick make good decisions in deploying his regional capital, and obviously attract different types of funding as well that is linked directly to our missions with defined owners and next steps and getting on with it the way Karen explained. And I think it's also important to continue working with regional partners to have a coherent region-wide investment story, which aligns Temple Quarter and what's happening there and the WECA growth zones, the regional growth plan, so the investors can see a clear narrative and potential for scale and certainty and long-term sort of opportunity. So I think looking at the time, we have some time for questions from audience. I think you can post your questions in the Q&A tab, and Judith will help us navigate through this next session. We'll take a mixture of questions that cover capital types and sectors and delivery themes, and we'll bring them to the panel for their views. Judith, it's with you. Thank you.
Fantastic. Thank you so much, Carmen. So there's a couple of questions in the chat. The first one, actually, I'll do them in the order they came in. Sorry. So the first one from Steve was around affordable housing. This came up quite early, actually, as in your discussion. So Steve asked, does affordable housing include social housing? And are there similar returns or investor appetites for social housing development?
And perhaps this is one for Ed to lead on.
Yeah, I'm happy to have a go. I think Nick, well, both Nick and Karen will be very good on this as well. So I suppose I start with Nick's 6%, and I start with that being subdivided into 3% income returns and 3% capital returns. So I'm coming at it from the opposite of the normal perspective, and I'm saying, okay, well, if it's 3% income returns, what does that look like as a tenure type? Now, my feeling, and Nick, Karen, correct me if I get this wrong, is to get to that 3%, you are probably at the very lowest talking about what is affordable, as in the coalition government definition of affordable, which is 80% of market rent. You're probably not, but I might be wrong in this, talking about social rent, which I think is around the sort of, has been traditionally 40 to 60% of market rent. So that might be disappointing as an answer, but the reality at the moment that as I understand it, certainly in central Bristol, is when you look at viability without significant capital grant, the only thing that stacks up is student housing. And therefore, even before you get into sort of full price market rent, even before you then discount that into affordable rent, and way before you get it into social rent, you get into a scheme which is probably generating, 1, 2, maybe 0. So there is a problem, is I think what I'm saying here. There is a problem between the policy requirement to provide social rent, which I completely, by the way, agree with from the question from the person who asked it, and the reality of the investment market. There are different ways to get around that problem. One of them will be subsidy. The other could be potentially very, very long-term patient capital, which takes a view over maybe it's 20, 30, 40, 50 years. And actually, over that very, very long period of time, there's enough capital growth, which gets to 6%, but the capital growth maybe is the largest share of things. So my feeling is the answer is no, it doesn't, but I might be about to be proved wrong by my other colleagues.
Thanks, Ed. Let's go to Karen, then Nick. Thank you.
Yeah, I mean, I think it's absolutely right. It is a challenge, and that's something that Bristol Temple Quarter will need to face into sort of very, very soon. And it's also partly why, when we've come to market in the first phase, we've actually got a collection of sites, coming back to Nick's point earlier. And so we're able across Bristol Temple Quarter to take an aggregate view across the whole of our sites to look at how we can deliver the right levels of affordable housing. But there's no sort of shying away from it. Viability is really sort of tough at the moment, and there will need to have to be a conversation with Homes England and others over how we ensure that the right levels of social housing comes forward as part of Bristol Temple's Quarter first phases.
Thank you.
So we might have an answer in 6 months' time, which is what I'm hoping for. But yeah.
Yeah, I mean, I agree with Karen and Ed. I mean, to put this in perspective, for the economics to be right, i.e. my 6%, you're looking at 75 to 80% of open market rent. And think of that being viable for key workers earning between 35 and 55,000, especially if they're sharing 2-bedroom flat. Because if they're paying 80% of market rent, they damn well want to stay in that property and not pay the full open market rent somewhere else. So they pay the rent on time and they look after it. And you have long tenure that drives attractive economics. And they've got reliable incomes if you think of teachers and nurses, junior doctors, etc. And the social impact bit comes in that if you build them, e.g. near hospitals, you reduce the commute radius and you enable recruitment and retention, etc. Now, the answer to the question is no, it's not social housing. And it pains me to say that, but one of the reasons is that at 40 to 50% of open market rent, I cannot get the economics to work. But also there's reputational risk in that the junior doctor or teacher is unlikely to be booted out of the property for not paying rent, but someone with less secure income and possibly mental health problems is going to be a less secure payer of the rent. And that creates a dilemma for the investors. What do you do about that? And then you have reputational risk. Now, the better solution to this important public policy problem is that I maximize returns of the pension scheme. Bristol City contributions into the scheme go down and down and down. Therefore, they've got the money, the capital to invest in social housing that's not economic for a pension fund. That's the way it should work.
Thank you. And that's a really interesting way of looking at this really important issue. Judith, next question.
From Anna, how can the public have more clarity on what public investment is delivering? Investment feels positive, but there is a risk the public don't understand what the public investment is driving. If the private investment is relying on public investment to do the heavy lifting, how are we making sure that the partnerships are equal and we're both driving for the one city outcomes together and that the city has a better understanding of this?
Thank you. That's a really great question. And maybe, Karen, we start with you because you are living in it at the moment.
Yeah, I mean, I think firstly, our Bristol Temple Quarter Charter sort of established our vision and our objectives and values. If I use the example of when we procured Muse as our partner, we were very clear at the outset we were wanting a partner that matches our values to deliver across for the city. So I think it's just being really clear around that. We work quite hard through our community and communications teams to be able to sort of work. We do an awful lot with the local community, with schools, across Bristol, in order to be able to sort of show sort of what our messaging is and sort of being able for them to sort of fully engage in what we're delivering at Temple Quarter. So, I guess in summary, it's hard work, but it's really is having that sort of two-way engagement and a collaboration and being completely transparent over what you're sort of seeking to achieve.
Thank you. And I think that point around transparency is key, especially when you are involving public funds of that scale as well. Ed, Nick, do you have any views on this question?
It slightly goes back to that spectrum of capital that I presented at the beginning, and intention. So the intention of the public sector investment is, in certain cases, to get a return, in certain cases not. But the intention, I guess, always has to be for the good of the taxpayer, the country, etc. And so starting out, as Karen was saying, really, with clarity of that intention, what are the outcomes? What is the impact? What is the theory of change, if you like? What is the thing that's going to be good for society, that is produced, that ensures people have homes, jobs, whatever else it might be, better quality of life? I think if you start with that and then couple that with the financial question, which is, well, then what is the return that's required? What's the risk that the public sector is willing to take? How long can it be patient for? And how much leverage does it need? I think that for me feels like the right order for the public sector investors to be asking the questions, because my feeling is that the private sector will ask them the other way around. They will start, as Nick has quite understandably said, I need to pay my 4,500 on average pensioner. I'm going to start with my risk adjusted return, but I will then hopefully find aligned impact at the same time, which I believe Avon has. But I think there's a do not pass go unless the risk adjusted returns are right for private sector investors.
Thank you, Ed. Nick?
Yeah, I mean, just picking up, it's a slight tangent, but picking up on what Ed said, my terror of what keeps me awake at night is I don't want to have a conversation with Bristol City Council saying, I'm really sorry, guys, I've screwed up. You've got to put a pile of more millions of pounds into the pension fund. That's the last thing they want. But in terms of building public confidence in public investment, it's a really difficult challenge because we're all bombarded with lots of information about loads of stuff online and through our email boxes. So cutting through is difficult. And I think it comes down to tangible delivery of things that you can demonstrate are helping local communities, explaining them really clearly, and then moving on to the next thing that does something similar. It's really the proof of the pudding is in the eating and the delivery.
Yes, thank you. And I think this is where having that investable pipeline and the momentum and the partnerships seem to all be really important to this clarity and story for the investor, whether it's public or private as well. Judith, do we have any more questions?
We've got two further questions. So I'll give you the first of those. The first one is from Julia Gray. Could panelists comment on the value of skills in relation to attracting investment into the region, both in terms of infrastructure development, capability, and future workforce?
This is a brilliant question because it comes up in a lot of business conversations. And just before we open up for answers, I wanted to say that we are really fortunate in Bristol to have one of the strongest higher education and further education ecosystems for skills in the country. And this is a story that we probably don't shine too much spotlight on, and I think it's one that's really important to tell. But Karen, in Bristol Temple Quarter, you've managed to get a really nice blend of university engagement and also private businesses. And talk us a little bit about the skills side of things.
So I would say it's critical to the success of the long-term place in terms of skills, and that's across the whole skill spectrum of jobs that are available, from the everyday economy through to those sort of high growth jobs. I think we're very mindful on construction skills at this moment in time in terms of building out and making sure we can maintain pace. We are working very closely with the communities surrounding Bristol Temple Quarter to sort of offer opportunities to actually for people locally to be able to get the right sort of skills in place to be able to meet those construction jobs, but also the jobs that will be available in the commercial and industrial and innovation space that comes forward sort of in future. So again, working really closely with City of Bristol College and others and the university to enable that to happen. And we have someone within the team who's pretty much, that's their day job to be doing, to make sure we're delivering sort of on the outcomes. And I think the other thing to mention, though, is in order to attract the skills workforce, it's really important that we provide the infrastructure within Bristol Temple Quarter to make them want to stay. And then that's, again, across the whole range of employment jobs that are sort of available. So it's two parts, really, I think.
Thank you. And Nick, you did allude to earlier in creating high value employment as well in the region. So I wondered if you had a view on this question as well.
Yeah, look, I think skills is a critical part of the jigsaw. And there are clearly skills shortages in certain areas. Karen touched on a few of them. I think, however, the development of skills is the responsibility of both government and universities and the school system and employers. I actually don't see a role for investors there, to be absolutely clear. Now, when we're investing in a SME company for growth, one of the things that our asset managers will look at is, does management have the right skill set to scale the growth of this organization? And if they're wanting to scale a plumbing business, they'll want to know not only are the management any good, but are there enough trained plumbers around that can enable this scale to happen quickly? Or will it take a long time because they need to train them. So those are important issues, but the responsibility has to be with educational institutions and employers rather than investors.
Thank you, Nick. And I think what you're alluding to is really critical alignment between curriculum and industry need to be able to deliver that scalable, investable proposition as well. And it will be something that investors do take into account. What's the future skill demand and the current training pathways? And this is where the collaboration with further education colleges and universities and management teams will be critical. Judith, I can see we have one last question.
There's actually another one to follow after that as well. So just to help you manage the time, I think perhaps that we might need to call it. So yes, can you see the one from Hamza?
Yes. If I can read it out loud. How does grassroots sports infrastructure fit into Bristol and South West investment strategy, particularly in areas of high deprivation? And I'd actually like to go to Ed on this for a first view.
Yeah, I mean, I think it's critical. Is the first thing to say. So when we were starting BBRC, one of the first things we invested in was investing in 6 five-a-side football pitches, and sport obviously has massive implications for physical, mental health, community well-being, etc. So there's a whole variety of reasons it's important socially and economically. I guess the question then is how are we defining the word investment? Because the question is around particularly in areas of high deprivation. So if we go back to there is a return required in the world of repayable investment. So if you recall my spectrum of capital, I'm moving now a little bit into the middle, the impact investing world. Is it true that in areas of high deprivation, it's less likely that there will be an investment return? There could be some. And it's more likely that investment is in the wider sense of philanthropy, in the wider sense of government support, and in the wider sense of there may be the potential for a repayable investment intervention, but it's probably going to have to accept a lower return. So I think for me, if you were there, Hamza, in terms of my spectral capital thing, I'm moving very much towards the right of that diagram, given the nature of your question.
Thank you, Ed. I think conscious of time, Judith, is there time for one last question?
There's one final question, which is quite long, so I will read it all out. It's from Anna Farthing. How can we clarify identity of place to attract both local and global investors and compete with other investable options? Local investors may find WECA nebulous and prefer to invest in Bristol or Bath. National global investors may be attracted by a region that identifies more closely to their city engine, such as Liverpool, City region, Greater Manchester, etc. To the national imagination, West of England includes Cornwall. How can the one city proposition be clearer about what is and what is asking for and where?
Thank you. Maybe we go to Karen and Ed on this, and obviously with final reflections from Nick.
Yeah, it is quite tricky, sort of on that. I think what's quite important to us is to set out our vision for the place, which is what we have done sort of at Bristol Temple Quarter, but also looking at how that sits locally and also the combined authority sort of growth plan. So, the way that we're operating, we have our vision, we have our values, we will then sort of promote it on that sort of basis, but we will then be very clear depending on what audience we are wanting, but all our sort of common themes sort of running through. Thank you.
Yeah, I mean, I think so. The tricky thing here is it's trying to reconcile two positions. One is there's a devolution agreement through to the west of England, and then the other side of it is if you ask the average person who doesn't live in the west of England, where is the west of England, whether that's international or national, they might not be entirely sure. So how do you reconcile those positions? Well, I think we need to work within the framing of the west of England and be supportive of our regional infrastructure, our regional mayor, and the component parts by the local authority leaders. But I think there is no harm whatsoever in very quickly naming the economic engines like Bristol, like Bath, and if we're going into the wider Southwest, like Exeter, etc., Plymouth, that sit behind it, because people will have heard of those. They will know where they're investing, the types of cities. So I think you need to do both, and it needs a clever bit of comms to do that.
Thank you. And Nick, considering your regional investing.
Yeah, I would agree with Ed that there's a distinction here between the structure of government and the West of England Combined Authority, and you may want that to be your public sector investment engine and catalyst, versus how do you give clarity to individual schemes. So I think Temple Quarter is gaining strategic clarity among potential investors. And we can see how that could emerge and transform, and we can begin to see how that could translate into economic returns. And then there are projects in Filton and elsewhere. So I think the individual projects, they need clarity of mission and purpose with projects that have attractive returns. And we should think of it, that's where we should focus our communication, rather than on the merits and rationale for WECA and its vision and mission, when everybody would get a bit lost, but it'll play a critical catalyst role.
Thank you, Nick. And on that note, just want to say a big thank you to our speakers, to Ed, Karen and Nick, for their time and for their really valuable insights. I want to say thank you for everyone who joined us today and for engaging with the panelists through your questions and your insights as well. I feel that we've had a very good webinar to establish why investment is actually a core enabler of Bristol's shared missions through the One City plan, and how through collaboration, through clarity, through really good government public-private partnership, we can convert this ambition into something that is investable and ready to deliver. So Judith, I don't know if you want to confirm the next steps for our audience, but from my side, thank you so much for your time and for engaging with us. It's been really, really valuable.
Thank you, Carmen. Thank you so much for your expert chairing, brilliantly done. And thank you also to Ed, Carol and Nick for really fantastic contributions. It's been a brilliant start to what we hope will be a long-running series of One City webinars. And thank you also to the audience for your really thought-provoking questions also. I think we aimed today to make today's discussion thought-provoking and enlightening, and I think it's really hit that brief. So thank you so much. And then also, just finally from me, I've started with a welcome slide, sorry. Before we let people go, just to say there are ways of carrying on keeping in touch with One City. You can join us for the next in this series of webinars, which will be around shaping Bristol's cultural future next month. And do also subscribe to the One City newsletter as a way of keeping in touch with this and other series of events that we'll be putting out there. But just to say thank you again to all the panelists for your fantastic contributions. It's been a brilliant discussion, and I hope everyone has a brilliant afternoon and weekend when you get there. Thank you.
Thank you, everyone.
Well, thank you.
Thank you.